Alright, this is so annoying. I just recorded the whole fucking video and it didn't even capture any of my voice. So it's fine. It's fine. It's just a sign that I should be practicing this more. Oops. And I should be going over this over and over again so that I can understand what the hell I'm talking about. Right? Alright, so let's do this again. Oh, this is annoying. Okay, let me explain it in the quickest way possible. Why the freak I continue to experience drawdown and experience wrong entries is because I realize, and we'll walk through this trade right now, why I'm in drawdown. Market is currently closed. It opens again in a few minutes. But the reason why is because this rule right here, this rule, okay? Just like you can be late to a trade, how we experienced many times that we are hitting either the way bottom of the trade or we're just, it's done, right? Just like you can be late to one, you can also be early. And when you're early, what's going to happen is you're going to experience drawdown. And so when you experience drawdown psychologically, it just does something to you. It's like, fuck, I'm wrong. I'm bad at trading. Like, I just entered. Like, really, it's going to go in drawdown? Yeah, of course it's going to go in drawdown because you're entering me. I'm entering incorrectly. And when I say you, I'm talking to me because this video is just for me. So I've noticed that I'm entering, even though I'm on the 5 minute and the 1 minute, I'm still entering on the indication. Okay. And yeah, indication is past continuation. But indication is only continuation when you're already in the trade. That is somebody else's continuation. They were there early for the trade, or they caught the trade right on time. They entered at the end of the correction, and now they're catching that continuation. That is their continuation. If you just got here like me, the reason I got bad on this trade, or the way I experienced drawdown and I entered wrong, is because I had a 5 minute, and we'll go over that. I had a 5 minute break, and I entered off that 5 minute break because I'm like, oh well, it's previous continuation, right? It's previous That's not your continuation though. That's where you don't understand that's that's a test of your patience now. And yes, you can enter on the indication, somebody's previous continuation. You can enter on that. You can. But you're going to experience the drawdown that comes with it once it corrects. And whether you can stomach that or not that's up to you. Because right now, I can tell that I have bullish confirmation. I have my daily bias is bullish, right? I have tiny little market structure on the 1 minute creating bullish structure. I have a 5 minute level that I'm above that I know buyers are at. That's all my bullish confirmation. The only problem is my entry was way too early because I entered off that indication. And now the top of my indication right here, I'll show you exactly what I'm talking about. Let's get off of that 5 minute, 1 minute, because that is not where I was when I saw this. I was on the 5 minute time frame, and that is the issue. That the time frame that I was on was the 5 minute, and I entered off the 5 minute. No, that is not how it's supposed to be. That is not how it's supposed to be. Why? Because the 5 minute time frame, each 5 minute candle still has 5 1 minute candles, and those 5 1 minute candles can form a tiny little ICC pattern, and you want to enter off that 1 minute continuation off based on what's going on the 5 minute levels, right? So right here, this looks messy and everything. That's why I like to use the line chart. I like to use the line indicator, right? So I have all my 1 hour levels marked up. I'm not going to go over how I marked up my 1 hour levels because it's the same exact thing, right? Find a high, find a low, mark the candle body closes because that's your market structure, go down a level, okay? You know that price reacts to those 1 hour levels because there's either a wick above, and you know that that wick is created off of tinier time frame structure, and you know that below it is the candle body where the body of the candle closed, right? Where the deal was done. And so you have information where there's buyers above and there's sellers below. And you mark that out and that's it, right? Move on. Same exact logic for my 4 hour and my daily. And it's helpful to get all the way up to the daily, 4 hour, 1 hour, and then you're gonna scalp. Because why? Because look at this 1 hour, 4 hour, and daily level are all one level. I marked them out on the same exact level. That means that there are big reactions there because all of the time frames are reacting to that level. And I wouldn't have known that. I would have just thought it was a 1 hour level or something, not knowing that the 4 hour also reacts to it and the daily time frame also reacts to it. So it's good to know all of this stuff in the background that's happening so that you know where price reacts powerfully. You want to get those power moves. Like, yes, we're scalping and we want those moves intraday, but there is a more powerful way to scalp also. And if you're going to be looking at all of the time frames, then you're just going to have more tools in your pocket. You're just going to be a better trader. That's it. Can't hurt you to know more knowledge if it correlates to what you're learning, right? It doesn't help me to know what the fuck ICT and fair value gaps and all of that mean if it's not correlating with ICC and my strategy, right? It doesn't help me. That's knowledge, but it's not helpful to me. So if you're on ICC and you know that ICC is market structure trading, then you know that you have to know what the higher time frame market structure is doing. That's what correlates to you. That knowledge. That's what makes you more powerful. Not going and finding strategy after strategy and trying to mix and blend strategies to come up with your own. Like, no, find the knowledge that correlates with what's going to help you and use that to your advantage and learn and dive deeper into that, because scalping is what I'm diving deep into, and I'm realizing I can scalp fucking the big trends and I can scalp against the trend and I can do all of this, right? Anyway, so right here on the 5 minute time frame, we had this level right here. We didn't catch any of this. This was all, let's pretend none of that was there. None of that was there. I mean, we didn't catch any of it. These are beautiful trades, right? This level where the 4, 1 hour, and the daily react off. Look at that. That took you all the way up to here, all the way up to new all-time highs. Because if we scroll to the left where I marked it out, those are your all-time highs. And it broke right past that level because right here 3 time frames react to this level, so it gave you an even more powerful, more push, right? And that was at 8:55. I should have been on the charts, but I didn't, and I'm not going to FOMO. That is just, anyway. But right here, once price came all the way down here, we had this high right here, right? And I could have marked this high right here or this low right here, but I marked this high. Why? Because it's the first high that was created when price was, at this level, or at the end of its, at the end of this leg, this is the next high that it created, right? Before this high, it was this high, then it's this high. So I'm going to mark that one, right? Most recent high. And then I know that in the back of my mind, let's pretend none of this was here. None of this is here. None of that. We already know. Because price can only be above one level or below one level, right? So if we're at this level and none of that was there, none of this was here, we know that if price reaches above here, then we're taking this high out. And it's not valid anymore. And we're going and we're buying. There's going to be buyers there. Because this high pushing us down is just telling us that there's sellers here, right? Let's pull this over. That's just telling us that below this line, there's sellers. Because if you have a high, then you have a low. And that high means that there's sellers pushing it down. And if you have a low that turns into a high, that means there's buyers pushing it up, right? And so that's all we're keeping in mind. That's the only level that I marked. Why? Because price is reacting to my 1 hour level. So I don't want to mark anything else because I don't want a million things on my line. I know that all of these lines, these time frames, they're correlating. Like, yes, this is a 5 minute level and I can mark it out to be a 5 minute level, but it's also my 1 hour level. Like, I already know price reacts to there. I already know that I can aim for this level and I don't need to mark it out. This one is the only one that I stacked because it's higher time frames. You understand what I'm saying? Like, I'm this 1 hour and this 5 minute, yes, I can leave my line there and stack it. But this is the daily, the 4 hour and the 1 hour. Those are gonna give me pushes. This right here, this 1 hour and 5 minute aligning, just saying, okay, we have some reaction here on the lower time frame, and let's try to figure out where price wants to go after that, right? It's not giving us that big momentum because it's, beating out dailies and 4 hour levels. This is just lower levels that we can stack and still take in mind that they're reaction levels, but they're not going to be as strong as these levels that we stacked because they're 4 hour, daily, and 1 hour. And not even, you know what I mean? Like, yeah. So right here, this is the level that we marked. So buyers above, sellers below, buyers above, sellers below, buyers above, sellers below. And so we just note that we're on the 5 minute time frame, and price at this level either goes up or it goes down, right? And so this level right here, we could also mark it out and be like, okay, this is price is not wanting to go below this 5 minute level, which also happens to be a 1 hour level. So what does that tell you? That we now have levels where we can enter from and aim towards, right? So we know that if price is right here and we're below it, we can target this low right here, this level, because price reacts to it on the 5 minute and it reacts to it on the 1 hour. We didn't check any of the 15 minute, the 30 minute, all of that, because we're not super into that right now. We're focused on the scalping of it all, and the scalping is your 1 hour level and your 5 minute levels, and you're gonna enter based off your 1 hour level. So that's the reason why we can have these marked out, and let's mark them red because 5 minutes is our red line. And so let's do that just so we're not confused, right? So 5 minute and 1 hour. So 5 minute and our 1 hour are both on the same level and they both react at the same levels. Will that always happen? Probably not. Will that always? Maybe it does. I don't know. I'm still. These are the things that I'm noticing as I'm on the charts every single day. That times will overlap and everything. And so we can see right here now price the way I answered was off of this 5 minutes. So let's turn the candles on back on because that's how I found my level. I know that on top of this high, price buys, and bottom below, it sells, right? And so I went and I zoomed in a little more and I was like, okay, well, as soon as price makes that entry, as soon as price makes that indication, I'm going to enter. And I did. I entered once price made that indication up, and I know that I should have entered at this level regardless of where I was, what time frame I was on, regardless of that. I should have entered once price returned back to that level, whether it was on the 5 minute or the 1 minute. And that's what I'm not doing because your entry is going to be a level. It's never going to be some random spot in the middle of the candle. It's going to be a level that you marked out, because why would you mark it out if you're not going to do anything with it? If you're just going to notice what price does, you might as well not mark it out, because you want to know what price does at a level, because you want to enter and catch that reaction. So the reason why we don't care, or we don't care, but the reason why we have to wait for price to go back to that indication level is because why did you mark it out in the first place? Don't mark anything out and just randomly start entering and exiting when you see price going up, price going down. And it's the same thing. You know, don't have any indicators, don't have any lines, don't have nothing on your chart. As soon as you see a white candle, enter. As soon as you see a black candle, enter. Like, that's basically what you're doing. If you're not waiting for price to return to one of your levels and you're entering randomly and you have all these levels marked out, you're doing it still wrong. You're just guessing. Yes, you can be on top of a level and this and that, and you can get lucky and you can catch a leg up and everything, but you're not having a strategy. You don't have a strategy that you could write down and teach to others or fucking repeat over and over and over, and you understand when to enter. You understand your rules, you know? That's why I entered wrong. Because I was just, it's like I'm randomly entering. And that's where I'm getting my entries wrong, because I'm not waiting for my time to go down, or my price to go down to my indication level. And right on the 5 minute level, we had this indication. Tiny, tiny, tiny indication right here. Okay, so now what should I have done? I should have dropped down to my 1 minute and time frame. Should have dropped down to my 1 minute time frame and waited for price to come all the way down here. Why? Why should I have waited? Because this 5 minute level that we marked out, we didn't randomly mark it out. We didn't mark it out so our chart looks pretty. We marked it out because price reacts at that level. Okay? And so we want to enter where price reacts. So when price is above that line or away from it, whatever, don't enter. Just sit on your hands and just be patient. I know that is the worst part of trading. The worst part of trading is the waiting, the being patient, the feeling like you've got to be in a trade, feeling like you got to be seeing those numbers move. I understand, because that's what I'm struggling. Why do you think I'm entering on the indication? Because subconsciously I'm thinking, oh my God, it's going to leave without me. I'm going to miss the trade. Or, all of this fear and greed is teaching me that I need to work on my patience, okay? Work on your patience and you will be fine. Everything requires patience and commitment. This trading thing is not something that I'm going to be doing for the next 6 months, and then 6 months after that I'm going to go back to welding or doing whatever the hell I was doing before. Like, no, forget about the timeline. Forget about dates and goals that you have for the end of the month, and I want to pass it for the Bible. Like, all of that is good, but all of that can also be pressure if you're not doing it correctly. It can be added pressure to you that is unnecessary because you're putting your results on a due date. You will never have February 15th, 2026 is when I will fully understand trading. That is not how it works. There is no due date. There is no anything. There's no date. There's just a flow that you reach where you finally like, okay, I understand this. You know what I mean? And look, what is going on to this chart right now? But the reason why you don't want to be in this trade, look, I entered wrong. I entered wrong. I should have entered down here, right? And now I'm at break even, right? So the entering early puts you at the top of a correction. And now the top of your correction, entering early puts you at the top of your indication. And now the top of your indication is your break even, versus waiting for price to correct all the way down to your indication level. And you enter there and you catch all those points right back up to your indication level plus more, right? So now if you enter too early, you got to deal with being negative. You got to deal with let me go get my thing. But let's see if we can do this one more time. Let me go get my charger. Okay, let's go back to what we were talking about, right? Anyway, the reason, look, I could have entered all the way down here and already But this is my break even because this is, I waited for that 5 minute. I was like, okay, it gave the indication. That means that must mean it's continuing. Stop it, okay? Unless you're already in the trade, that is not your continuation. That is your indication. Be patient to wait for your indication. Wait for your continuation. Trading, the most gut-wrenching part about trading, the most horrible part about trading is how patient you have to learn to be, because this is all a test. Everything, this trading, it requires patience and it requires commitment. The next 10 years of your life, if you're going to be trading, you got to be patient with the charts to wait for your setup, wait for your entry, and then you have to be patient for it. You have to be patient with yourself, where it's like, okay, I'm losing, but I'm learning, but I'm taking what I lost and what I'm learning into consideration, and I'm applying it, and I'm doing better every time. If you don't have the patience and the commitment for it, just don't do it, because it's just going to be an inconvenience in your life. It's going to be a hurdle, and it's going to be something that is like not going to be beneficial to you at all, because you don't really want to change. You don't really want to become who you know you can become, because trading is a mirror, and trading will always show you what you need to work on. I am struggling with my entries because I'm impatient. I'm impatient and I have fear of missing out. Now I know what I need to work on. I know that I have to work on waiting for price to go back to my indication level, waiting for price to give me my setup so that I'm not experiencing that drawdown or anything like that. And so that if I'm not patient, I'm not waiting for my setup and I'm entering incorrectly off the 5 minute and the 1 minute. Imagine what I'll be doing when I'm on the 1 hour, when I'm on the 4 hour. I'm going to be entering incorrectly and experiencing drawdown of thousands and thousands of dollars. And that is just not a a good strategy, in my opinion, because it just means you never learned how to take a proper entry. You never sat down to realize, hey, every time I enter, I'm getting drawdown, but then I get into my target. Why is that? Probably because you're entering too early or something. But yeah, the reason I this trade is just, I don't know, see what even the 5 minute is doing, because the 5 minute, you see how we could have entered right here off that 5 minute um, indication, correction, continuation, right? So this 5 minute right here gave us a level that we could have been, that is a 5 minute level. This is a valid 5 minute level because this is a 5 minute high, right? This is a 5 minute swing high. Then it went back and corrected, and then it continued right here. And because we were already in the trade, this is our continuation. Do you notice that? But if we were to have been in the charts right now, and we see that, oh, price broke this level right here, let me enter as soon as price breaks this level, right? You could have, because I don't know, could have you? Because now you didn't wait for that correction. That correction's over. And this is your safe entry right here, actually. This is your safe entry where you would not have experienced drawdown either, but you would have missed out on some gains because you're waiting for that 5 minute high to be taken out on the 5 minute level versus entering off that 1 minute level and waiting for that 1 minute high to be taken out, right? And so you could have entered here, stop loss right below here, and then that is your trade, targeting this high or this 5 minute high. But we know that this is a 5 minute high because price reacts to that level before. We've seen it before. So we're safe to either target this high or this high, but honestly, I would just target this level because I didn't, this is not a major reaction level. So yeah, like you could have entered here, but still you had to wait for that correction. And either way, you wouldn't want to you wouldn't have wanted to enter right here off that 5 minute alone. If you saw prices coming above this level, so let's go down to the 1 minute, prices coming above that 1 minute level, right? So this is my entry, so let's delete it. Prices coming above our 1 minute, 5 minute level right here. You could have entered right here also, stop loss below there, and then seeing that it was breaking this high right here, and that's why we were good. We were breaking also this candle right here. The reason why it was even breaking that 5 minute candle or level in the first place is because it was this little swing high, this tiny swing high broke. So that was also your 1 minute indication. Or, no, not continuation because it hadn't, well, yeah, indication right here, the tiniest indication right here off that 1 minute time frame. On your 5 minute chart, you have a tiny break, right? You have a candle right there. Or no, my bad. It's that tiny wick. See, this is what we're talking about, where wicks they have structure. So that 5 minute wick right here is a tiny indication on the 1 minute level, right? And so you could have even come in at this break of this swing high right here and waited, and you still would have been above this level right here if we would have marked it out above this level right here. So now you have three confluences that are bullish telling you take a long. And so if you would have entered right here, that's your stop loss right there, or even fucking just right down here or whatever. And so I don't know, it's just what I need to realize is just I still need to be more patient with my setups, and I have to be more. See, if price broke this level right here, we were already above this level. That's why continuation indication is only continuation if you're already in the trade. Okay, we were already in this trade. We fucked up, we got in way too early. So this continuation, this indication right here was our continuation. Okay, so that's why we're able to trade that, but I wouldn't have entered that probably. I would not probably have entered off that. If I would have, I could have probably would have waited for, like I said, a break of this candle. If you're still not in that trade right now, a break of this candle and a retest of this level, and then watch price go and break this level again, and then reach your target, your TP. So right here, you're either in the trade or you're not. You gotta wait now, right? So now we're waiting. Price either comes back and retests this 5 minute level and continues bullish, or it just continues bullish. Or it comes back, retests this level, rejects it, goes down here, accepts that, rejects it too, and so it goes, not reject it, but like it accepts this level and then accepts this level, and we start creating bullet structure. So that's where things start to get more like, okay, I'm trying to now understand price action and market structure rather than just finding an indication and finding a continuation. You want to get good at reading the charts, the price action. So because at the end of the day, ICC is only trading price action and market structure. So you want to get really good at that, and it's gonna help you. So right here, I'm gonna end the video because this was for me, but we will see if this hits. Like I said, we have a new indication. So are we gonna be scared if price goes all the way down to here? No. Not if we're holding the trade. If we're scalping and we wanted to end the day on a green level, then that's perfectly fine. We would end right here. We see that price is kind of consolidating, so we feel comfortable ending right here, and we can just move on our day. Remember, if you're on 5 accounts, this is over $2,000, but we know that the 5 minute, since we're monitoring that 5 minute, we still have to come back and make this correction, right? We can say that this black candle right here was the correction, because sometimes it won't go all the way down to the level that it indicated from. It really just It won't. That's why you gotta realize that you have to get good at price action and reading what it's doing, because these indecisive wicks right here are telling you that price doesn't know whether to go up or down. That's why this candle is struggling to go up or down. And so on the 1 minute, we can see the same thing. It won't go up or down. Those wicks won't go up or down. That means that this is consolidating because those wicks are made up of candle structure in the lower time frame. So that's how you understand how entering way too early can also put you in drawdown, and also entering way too late will just wipe you out. So there are two ways where you can enter incorrectly. You either enter too early or you enter too late. You can't do, you can't have a late entry, and maybe you could actually have a late entry and hit your TP, but it's not going to be the TP that you wanted, or maybe the risk reward that you wanted. It's just going to be a quick scalp that you got because you're late to the trade.